Welcome traders to this video analysis brought to you by Admiral Markets, where I take a look at the markets in between the holidays. Is there any price action that I find interesting? That is the main question for this video, where we take a look at the euro dollar, pound dollar, dollar yen, and Aussie. First of all though, please be aware that this video is not intended for everyone. To find out if it is for you, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange is considered high risk and it may not be suitable for all traders and investors. Please seek the advice of an independent financial advisor for more information on that. And this video is for educational and informational purposes only. Alright, let's take a look at the charts. Of course, before we actually take a look at price action, keep in mind that there are many bank holidays throughout this week as well as last week. And obviously, these weeks are known to be very quiet, very low volatility. Not many price action, not many good trades in a way like position trade or a swing trade. Not many opportunities, and it would be good to either reduce risk seriously or at least even demo trade perhaps. Or even stand aside for this week and rejoin the market perhaps next week or the week after. So, those are things you want to think about. In that regard, when I look at the market in general, I think that the swing trades are not a good option for this week. The market will be closed one entire day as well. Plus, the action should be as quiet as last week. So I wouldn't be looking for that. What I will be looking for perhaps is a day trade. Is a trade that could be opened today and closed today, either today or tomorrow, max Wednesday morning, my morning in European morning. So, in that regard, I would be looking for smaller trades for smaller time frames as well. But if I look at the bigger picture, though, obviously the euro dollar is still in that downtrend, and 2 weeks ago we had a bearish candle. A week ago we had a bearish candle, although as expected the candle is very small from high to low measured. Basically you're looking at a candle of about 100 pips or so, which is typically normally what a day candle would look like, not a weekly candle. So, but that is expected, of course, with the holidays last week. If we look at the euro dollar now, I would think still that this could be a bouncing spot, just based on the bigger analysis here from the monthly chart. The fact that we are getting close to this bottom line here. Alright, in that regard, this could still be kind of a small bouncing spot. We are pushing through the 122.50 level though, which is a bit a signal that we could go lower as well. For the moment, if I look at the break here of that 122.50, it's very minor. It's been a kind of a slower push. If you zoom into the 4-hour chart, you'll see that a bit better maybe. It's been kind of like a small push through that. So it looks more like a bit of a divergence between these bottoms here, and I think that if we break through this channel, this downtrend channel, that could be a signal that there could be some correction to the upside here to retest part of this downtrend here, this down move. Now that of course was a pretty impulsive downside, definitely. So it could happen, of course, that we don't get much retracement, but something of this, putting a fib here, and if we could break this channel, basically if we break back above this resistance here, above 122.50, I think there's a good chance to go up to the 38.2, the 50, the 61.8 fib to retrace part of that downside. If we look at the fib on the daily or the weekly chart, basically we'd be retracing part of that weekly candle or part of that daily bearish, those few daily bearish candles. So basically that's what I'll be looking for. I think that 121.50 and here 122.50, these two levels are my lines in the sand. If price breaks above 122.50, I could be looking for some smaller upside trades. If we do break below 121.50, 121.65 here actually, then maybe some small bearish trades, especially below 121 down to 120.50 and 120. So small zones, as I already said, it's not going to be a big trades here, not going to be a lot of risk in my trading, but maybe some smaller intraday trades at the very max. And if that happens, then I would be looking for your dollar upside, for instance, to up to 123.20, for instance, the 38.2 fib. All right, let's move over to the pound dollar here, and we have the weekly chart as well. Same story. Last few weeks have been bearish, but if you look at the bigger picture, if you look at the last 8 weeks or so, And you can do that better maybe on the daily chart. Price has just gone sideways, in fact, right? So here too, kind of looking at the top and the bottom of that zone, although we've tried to push through the bottom, it has not been so successful, as you can see on the 4-hour chart here as well. Price is just going very choppily with that break. So price is already back above that support line, in fact. So much of a break it wasn't. And it looks like we can probably retrace back to the top of that channel. I'm going to be a bit cautious with that because the pound dollar likes to spike up and down a lot. But it looks like a bit of a more bullish mode at the moment, despite the downtrend on the bigger time frames, and despite the choppiness on the 4-hour chart. So if anything, perhaps looking at this 50-minute chart here, you can see already some upswing here. It's highly risky because of the fact, of course, that there is that bigger downtrend. But we also broke out of this channel like this, slowly but surely. So any dip today could still see a rebound, I would say, up to the top. It would be typical for the pound. But of course, as always, it's always in trading, it's always about a statistical edge and never one trade outcome. This remains the same for the pound dollar as well. But looking at the fact that we hardly broke through these support levels, and we actually bounced off that 155 level, a bit of a bounce seems likely on this pound dollar as well. Dollar yen neatly bounced off the 38.2 fib if you put the fib from this bottom to this top here, and could be a reversal at that point. What could also happen though is just more of a correction downwards here to get some kind of triangle formation at this point. That could be very likely. Price is not able to break through this 121.90 top, which is not that strange. It was a big impulse. So some kind of pause or consolidation or triangle, I think, is the most likely actually at this point. I think that's the most probable. Doesn't have to be the only outcome, of course, but it seems the most logical forecast at this point in time. So a bit of a downside here, a bit of a retracement, in fact, in line with the euro dollar and pound dollar potential retracement, dollar weakness retracement, in fact, does not seem out of the question here. And you can see here a bit of a slowing down. So would be interesting to see if price can indeed, if we put a fib on this swing high, swing low on the 4-hour chart, could go down to, for instance, 116.70 to 78.6 fib, where that would be a natural bouncing spot for upside yet again. So we'll be looking for longs at the 78.6 fib. Then last but not least, the Australian dollar. We're looking at the 4-hour chart. We see a very nice downtrend channel, but it's kind of slowing down, of course, here too, due to the holidays. And the daily chart, you see this channel even better in scope. Now, we are having a bit of divergence probably on the daily chart in the meantime. As you can see that the strength of this downside in the blue channel is not matching the strength of the previous downside here. The AO here, the oscillator at the bottom, is lower on the previous move. Now, what could happen, therefore, is that we get some kind of retracement of this last downside if we put a fib, for instance, from here to here. Just like the euro dollar, in fact, if price were to break out of this downtrend channel, we could see maybe a retracement of this last swing high, swing low, and price could break out of blue and maybe retrace up to the 38.2 fib, the 50 or 61.8. So in a way, it's a bit of the same story, and we'll have to see, of course, if that happens. But first of all, if price can break out of these resistance lines, for instance, that's step one. And then if it can move that far. At the moment, though, because of the holidays, this break could be very choppy and could go actually more sideways as well, by the way, because of the many bank holidays that we have throughout the week. We have the usual webinar lineup, except the expert advice here on Wednesday because of the New Year's Eve. Otherwise, we have the usual lineup, and the Pro Learning Lab returns on the 8th of January. But we do have the live trading lab and the weekly FX recap and Forex strategy this week. And next week, we'll be back with the usual program in full scale. So I hope to see you in one of these webinars. And make sure to follow Admiral Markets on social media. And wish you all happy hunting and good trading.